John, is implied volatility an overall market sentiment or specific to the stock performance? It's more specific to the fear gauge of the stock based on known events coming up. The implied volatility on the options are looking towards a future expectation of fluctuation on the stock, not bullish or bearish, John, but the implied volatility is looking for that as well. And how do they change by the day or the week? All right. Well, let's go to the main home tab first. This volatility, VIX, is a measure of the fear gauge across the entire market, the volatility of the entire market. Now, we've seen this extraordinarily high recently. I think we were as high as 36, weren't we, in February? Yep, 36, 37, 38. You see going here, this is a 3-month chart. So this is January as the market was declining. And the fear gauge of continued decline, sorry about that, the fear gauge of continued declines and continued fears of inflation, continued fears of supply chains. Meanwhile, during this time, yes, Russia was building more and building more and building more and was getting closer and closer to that February 25th, February 26th invasion date. But this here, the volatility in the market, the fear was increasing because of fears of increased inflation, fears of increased gas prices, fears of increased supply chains, and that was happening as well. The market is getting spooked. It's not a calm market anymore, John. This is the VIX, measuring the volatility across the market. How is it doing that? It's based on futures trading for the futures volatility 2 or 3 months away. Things started to calm down here as we got into February. We started to see a little bit of a lull, but then February started to take a turn for us. Well, we're right in February here at the bottom. There's this spike up here that happened. That's a pretty big spike, actually. It went from 20 to 32. That's a pretty big spike for the VIX in a 4-day period. And then kept going. Now, here's probably at the peak. Where's that? It's probably March 4th, March 5th. Oh, it's the 7th, it looks like. 7th or 8th, right? Or 8th or 9th. We've started to pull back since then. And the market was still going down, and there was some easing here. But now, what have we seen? The last 8 or 9 days or so, the last week of trading, we started to ebb down to a lower value. Things are calming down. Inflation's still bad. Gas prices still bad here in the U.S. Things globally still bad. But we're digesting it with the market rate increases, the rate increases. To help with that, of course, that's sort of ebbing some of the fears of volatility in the future. Some things are calming down, not as much as we would like, of course, but we're seeing that as well. Okay, so the VIX is measuring the overall market. It's not a sentiment that is bullish or bearish. This is telling us that things are calming and we might not be expecting as much fluctuation. However, John, we could wake up Monday and the VIX could be at 28. Something could happen over the weekend, whether it's over in Ukraine, whether it's here with inflation, whether something happens news-wise here, and that could cause volatility to spike. It upsets the market when things happen that make the market go choppy, John. Okay? And, why is it changing? And it's because of the outside forces. Now, this is the VIX, also related to VXX, which is the volatility ETN across the market, and, of course, UVXY, which also is a ETN that measures volatility. You could buy shares of those. And as you can see, UVXY tracks the VIX pretty well percentage-wise. VXX is a little bit different. Okay, it's a little bit different, but it's still measuring volatility. VIX is down 4% today, and VIX did not move. The other day, VIX was down, but VXX was up. It's using a different sort of futures measurement, or measurement of volatility, I should say, as opposed to the futures here that VIX is using. Now, an individual stock. Let's go ahead and just take a look at MU option chain. We're going to look at the April. Do I want April 8th? I think I want April 8th. No, I want April 1st. I'm going to take a look at these April 1st options. Right now, John, we're going to take the at the money. Now, I know MU is not considered a normal low volatility position. We're just going to do the call research. This might take a second to come up, John. What it's doing for us here is it's going to show us a historical graph as well as all of the current options data that we have for this MU April 1st 78 strike call. The historical graph is going to default and show us the option bid versus implied volatility since this option was released on the market. Now, I apologize it's taking so long. The reason why it's taking long is because right now in the background, we're updating all of the historical options data for today's close. So it's trying to read from those tables that are getting updated right now. And there we go. Now, this isn't too long of a time frame. This April 1st expiration option has only been released on the market since looks like February 10th, maybe a little bit more than that, maybe February 1st, somewhere around that time frame. Okay, it is a weekly option, so it's only been around for 5 weeks. But this is a big run in implied volatility. You know, we're going up and down here in February with sort of everything else going up in February. It comes back down a little bit, and then it just runs up and runs up. And now the last 5 days, even with VIX decreasing as we saw over those last 7 days, this at the money, well, now it's at the money, but this MU call has been increasing in implied volatility from 0.6 to 0.80. That is a huge move. That's a 33% move in a short period of time. And just about 5 or 6 days, 7 days. So you asked another part of this question. Is it related to stock performance? No, not necessarily. Not necessarily. Let's take a look at the stock chart. Has MU been moving up? Has it been moving down? Has it been crashing? What has it done in the last 7 to 8 days? It's pretty stable, isn't it? And it's staying right between 75 and 80. I'd say if there was a 5-day volatility or 7-day volatility we track, this would be around 0.15, 0.16. It hasn't moved. Yeah, it's moving each day, but it's not moving much at all. Tight window, 75 to 80. Implied volatility is spiking ridiculously. It's up 33% in 7 days. Why? And it's because MU has a known event that could cause the stock to fluctuate wildly coming up in 4 days. Earnings are coming up on March 29th. This is a buildup of volatility, even though the stock is not moving. Because everyone knows at 329 after the event is announced that the stock could potentially fluctuate, go up 8, 10%, or go down maybe 8 or 10%. It's not giving you a direction. The IV increase is not giving you direction. It's saying the potential for a wide fluctuation in price because of a known market event coming up could cause the stock to fluctuate wildly, which could result in good gains or could result in heavy losses. Now, you're absolutely right. IV of an individual stock, if we were looking at IBM recently, McDonald's maybe or something along those lines, the whole time that VIX was increasing when we saw, where's my VIX chart? There it is. The whole time VIX was increasing here, those options implied volatility for stocks that didn't have earnings coming up and are normally considered low risk, low volatile stocks like IBM, they were actually going down in price in February too, with everything else, of course. But that's the case. That's related to the market, right? If the market volatility is going up, it means the market is usually going down. When VIX is going up, it usually means that there's fear increasing for the future, and at the same time, the market has been going down. Let's take a look. I want to compare. I'm sorry. Let me take out Bollinger Bands and MACD. Not MACD. Let me take out Bollinger Bands and SMA 20. Here we go. Now, let me try SP. Let me see if I can compare it to SPY. Nah, I want to try SPY. I want to see if it's not as it's closer. It's not you, but you can kind of see here. Let me get my pen, John. John, I'm sorry. You can see here, SPY is moving up, and we're at what? A low volatility at that time. SPY starts going down. VIX is going up. We're still kind of going down, a little flux, then we're going down. VIX is going down, SPY is going up. So market as a whole, it is an indicator. When the VIX is going up, it means the market's going down. Okay. When VIX hits a low, the old low used to be 9, 10, 11. If VIX hits 9, 10, or 11, that was usually a signal that the market might start to turn, that the market's been doing real well. Now, I don't know if it's 15. I don't know if it's 16. I don't know if it's 17. I don't know if it's considered a low on the VIX anymore with all of these things we have going on around us. There's a large fear of everything going on around us, and it can all change on the dime. So Is it an overall market sentiment? Well, when you hit a peak of VIX and it starts to pull back, that's usually a good sign. That means the market is moving up. How long is it going to last? It depends. Again, on Monday, we could see the VIX spike up to 27, 28. If something terrible happens overseas over the weekend, if something, well, okay, let me say that a different way. If something more terrible that we weren't expecting, someone crosses a red line we weren't expecting to ever cross, then yes, we're going to see a lot of volatility and we're going to see the markets pull back down. Okay. A stock individual implied volatility, it will be increasing as the stocks drop. Now, let's just say, IBM, as I mentioned, it wasn't, not related to earnings. The stock was declining, the market was declining, so those options implied volatilities were going up. However, as we just took a look at with MU is moving up in price. It's stable over the last 10 days, and then we saw the implied volatilities drastically increasing, and this is because of that earnings event. So usually when you see an IV increase, and why they change hour by day by week is because of fluctuations in the stock, yes, John, but also fear of what's coming forward in the market, fear of an unknown or known risk of high fluctuation because of a known event such as earnings coming up in the near future. Okay, so yes, even a low volatility stock like McDonald's or IBM can have a large shift in volatility, a fear in the market. The banks really increased in volatility when the fears of inflation started to trigger as well. But then that was eased by, of course, what? That was eased by the rate hike discussions and then the eventual first rate hikes and discussion of further rate hikes as well. Okay, so that's sort of implied volatility in a nutshell. The VIX gauges it across the market. As it's declining, we know the market's going up. Usually when you have an unexpected event, you think back to February 5th through 9th of 2018. That was the first talk of the trade war with China. The market was motoring right along, doing great, and then all of a sudden the volatility went from about 15 or 20, no, it was about 15 or 16, it might have been lower, to about 35 in an hour. That just disrupted market continuity with one statement that hadn't even taken place yet. And the volatility, I want to say, reached as high as 45, 48. Let me go back 2 years. I'm sorry. Wow. I go back 4 years. Yep. Right into 2018. Oh, wow. Man, I got to go back 5 years. Sorry, folks. There it is. Take my comparison out too. Let's get rid of that. Yeah, that's here. This is the February 2018 gigantic spike. It went up from 9 and 11 and 12 up to 45 in about a 4-day period. You know what this is, of course. That is March of 2020. And all these little spikes along the way. And they're occurring because of market uncertainty. The VIX was really low before the market started to tank, of course. But the pressure was building on the upper parts of the market, and the market sentiment indicator was giving us strong bearish warnings. January 20th of 2018 and February 10th, I believe, February 15th and February 18th of 2020 before the high of February 26th. I think it was 26th or 25th of 2020 before the big decline to March 26th of 2020 because of the shutdowns and the pandemic as well. All right, John, so I hope that answers your question. There is some further discussion on volatility, I believe, in the on implied volatility. I think it'd be under options concepts. Market reaction. Yeah, there's some discussion on that with the market reactions. Does high implied volatility mean the stock's going up or opposite for low implied volatility? We debunked those two ones there, John. That was in a presentation back in 2021. Let's see, IV. But that all being said, of course, when the VIX gets back to whatever its new low is, if it's 17, no, I'd probably wait till about 15 or 14. If we ever see volatility go back to 15 or 14, that'd be great. It means a lot of things are going directions that we want to see. But that might be a good market hedge to buy a call on the VIX or buy calls on VXX. farther out to use as a market hedge, just like buying puts on SPY. Sometimes we buy calls on the VIX when the volatility of the options of the VIX is low enough to make it affordable. I know there's implied volatility on the VIX volatility options. It's always crazy to think about in that case as well.